Good afternoon, Miguel Osio with the Winston Minute, our report at the market's close. And today's market's largely flat. The S&P actually 1% and change above its all-time high, but overall flat, about 10 basis points across the board, except the Nasdaq, I think it had, about 20, double check here, about 20 basis points for the Nasdaq, driven mostly by Apple. I think they're sort of coasting on some of the optimism from US and China trade talks from last week, as well as some positive long-term belief in their long-term strategy with their new services and offerings that they announced a couple of weeks ago. Now, what we also saw was General Electric's rating or classification was cut by JP Morgan today, indicating that they see a long time before General Electric can recover and deliver return to its shareholders. They foresee a long and tumultuous restructuring. We'll see if the other banks agree, if other analysts agree. I think there could be an opportunity for a little bit of risk arbitrage if someone really digs in deep and understands the challenges and hurdles of General Electric and whether they have the infrastructure and the talent to really reform the company and plow through these issues and recover quickly. Remember, we've seen GE make some incredible moves between 10 and 20% off of some positive news here and there. So I think it's a great opportunity to maybe get it at a discount and benefit off of some volatility if they do a few things right. And if you follow the dominoes of them doing a few things right, you could get a very important return from the stock. That's more of a midterm vision. Last but not least, crude extended its advance as escalation of fighting in Libya made headlines today and made the forefront of oil traders' minds, definitely outshining U.S. overproduction or U.S.'s capacity to increase production. That's been maintained oil prices at least stable in the past few weeks, and now we see a return of Libya to sort of the factor stage that we see in oil trading news. So we saw prices rise on that. Been a while since we've heard something about Libya. Maybe I'll jump in a little deeper. And last but not least, the dollar fell for the first time in its last 3 sessions. We're watching it closely, sort of, I think, as we see these movements in different risk assessments, nation to nation, currency to currency. We see these global currencies react to each other. We see oil prices and commodities react as the US-China negotiations are going on. So I think while we're still in flux, hopefully there'll be some more stability the next quarter's round of economic data and earnings. I think investors are really holding out to get next batches of earnings, next batch of econ data, next batch of GDP growth data. And it's evident because today we saw something in the S&P that although it rose and eked out that sort of all-time high, the volume was quite low. So that's very interesting. People are definitely in a holding position. So we'll keep watching. That's all we have today. Catch up with us tomorrow and have a great evening.